What's up, everybody? It's your girl Erica from the Classy Climb blog. Listen, coming to you to the second time today. It's a happy holiday. So I got on a special guest that we brought onto this channel maybe a year ago, maybe two. We don't even know. It is Charles Oglesby, the third of Todd Capital. And you know what, you guys? It's a special honor to bring him on. So Charles, please introduce yourself to the audience.
Well, first and foremost, I feel that business must be booming because the first time I was on this show, my hair was crazy. I wasn't nearly as polished as I am today. I have the Todd Capital polo, so things are going well over with us. My name is Charles Oglesby, also known as Todd Millionaire on internet or Instagram and Twitter. We own the Todd Capital Investment Club, which is an affiliate of Todd Capital LLC, a California limited liability company. We've basically taken that Todd Capital company and just expanded it into a bunch of different smaller affiliate companies. And so we have Todd Acquisitions, we have Todd Consulting, we have Todd Capital University, we have Todd Capital Investment Club for real estate. We're doing so much, but all of it is really just stemmed off of that investment club that we put together, where when I was on this show, I think we had maybe like 50 members, and now we have over 250. And that's just on the stock side. On the real estate side, we have like 75. And unfortunately, we haven't been able to get to everybody just because of regulatory concerns. So we can't openly just bring people into the real estate club, unfortunately. So what we're doing is we're making sure that all that stuff is situated correctly. I'm in the process of talking to one of my friends who's also a lawyer. And so we're going to get him on to help us strictly just focus on getting us into a crowdfunding platform. So when that happens, then people can all come on, because crowdfunding platforms are much more lenient than just having a individual investment club, which can be more restrictive. So the investment club is easier to start. The crowdfunding company is more expansive. It lets us walk into other opportunities. So I'm really, really excited. We did some crazy stuff this year, but I know next year is going to be even more successful.
Y'all, boom, mic drop. No. Nah, I mean, listen, the best part of this is the fact that, Charles came on the show and it was like lots of great information and energy. I think I've been on his show twice or two or three times. He's come back on here. This is a really great follow-up because, anything is possible, right? The internet, there's a bunch of people who don't know each other, never seen each other, all investing together. Again, we're all investing together, but we haven't all seen each other, right? And like, that's what I was just saying in the future, I'm going to visit California and actually set eyes on a person, right? Because it's so interesting and fast paced how the internet can move. And so I already saw Aaron say, this is going to be a great show. Thank you, you guys. You know the routine when you come in, say your city and state, because what it does is it helps Charles, it helps me, it helps all my guests I bring on get an idea of who's in the audience and who's watching and who likes the feedback. It's really helpful. So it's 35 of y'all already in here. Go ahead and hit the like button when you come in. So Charles, what have you learned on this year? I mean, there's so many things, but what have you learned over the year?
Man, there's so much because we do so much. I think that the most important thing I learned is to just move forward. Move forward even if you don't see the end of the staircase. And so that's a blog that I wrote about 2 days ago, where we had this situation where we had this rehab and we knew we needed to get it done, but we didn't see how we were going to get it done. But we knew that if we stayed and didn't do anything, we'd still be in the same place today. And so we moved forward and we just began to see the steps unfold before us as we were taking steps forward. So that's something that I've experienced in everything we've done on the stock side. When we first started doing this, it started very, I always say, Mickey Mouse. And so we had a Google Doc Excel sheet. We had people sending money through PayPal, Venmo, all these different things. And we still were bringing in new members. We were still investing money as a group. We were still accumulating resources. And now we have a software platform that does all of that for us. It's way more technologically advanced. You can manage it from your phone or from the internet, from your actual desktop computer. And so now people can go in, send their money. It actually pulls it automatically. You can vote on what you want to buy. You can research stocks. You can have communication through that app. And so, I mean, we just started doing stuff. A lot of people have ideas and they're waiting to see the end result instead of just seeing the next step. What's that most important next step? The most important next step is to bring in more people. So I think that that's one thing we learned. The other thing I learned is just to take action and do a massive amount of action. it's like Grant Cardone always says, like, we underestimate what it takes to be successful. And so what I do is I literally say yes to everything. I say yes to everything, any opportunity I say yes to, and I do a lot of action. So I think that it's so much that we learned. I think that you have to open yourself to abundance. The idea of having an investment club of 250 members going on 300 is an abundant mentality, whereas most people will say we need 10 people to do this. And so for us, we just opened ourselves up to the possibility. Another is just giving away value. You have to give value. You have to share. You have to give to the community. And what we did is we ran the investment club and we made 47% in that year. The first year, it was kind of flat. That second year, we killed it. We did 40% return on the total portfolio. And so we made about $25,000 in profit, which I think is pretty good. And so then we distributed that all to our members. And so they were happy because they got checks, they got fat checks, and they still have their money invested. And so people have gotten basically half their money back and they still have all their money invested. And I think that's a pretty good thing. We learned so much. I think that one thing I always tell people is by giving value and by helping people invest, I actually became a better investor. And so the investment club did 47%, but I might have did about 1,000% on my own. And so I didn't make my money by charging members. I made my money by investing my own money with the skills and experience and expertise that I picked up just by helping other people, because I was under pressure. I had to perform. I had to show people that what I was saying worked. And so there's a lot of sleepless nights. There was a lot of listening to podcasts, reading books. I was just pouring through stuff because I had to have this work. I was performing on a stage of 200 people. And so that skills and experience translate into investment experience of my own. So just giving value, taking massive action and moving forward, even if you don't see that last step.
Man, what people kind of miss a lot of times is people see a company at a finished product. You know, they see a Nike later, they see a Under Armour later, they see all these things. They don't see the beginning steps. And you guys have had an advantage to see the beginning of a company or fund, however you like to say it, grow. And the steps, the missteps, and the keep going and keep fighting. I think it's amazing because when people say, oh, you know, Erica, people can't do it. Like, there's so many other people doing this. Groups is the way to go, right? And every other community is doing group-based investing. You know what I mean? And it's like, you're missing it. So I'm going to give a few shout outs to people in the audience. There's like 50 of y'all here. Hit the like button. If you're excited for Charles and I, put a 1 in the comments because I know you guys are. But again, we'll go off with Aaron from Black Legacy is NYC. Farmington Hills, Michigan. Nathaniel. I don't know where that is, but maybe it's close to Detroit. Bentley, DFW, Birmingham. We got Chicago in the building. We got Los Angeles in the building. Fort Lauderdale, Florida, Anaheim, California. Tyrone Cook, I was just talking about VidCon, Anaheim. Fairfield, California, Stephen Loff. Repping New Orleans and Oakland and ATL. Apple Mac, pick a place. You repping too many places, Apple Mac. Apple Mac, I'm thinking about buying something in New Orleans. You should definitely chat it up soon. We got Detroit in the house. Somebody said, Mr. Shelley said they love your podcast. Got Sonic, Don Sonic, the lead.
Podcast for a second.
Yeah.
That's the part of that 10X right there. It's the podcast too. Podcast, blog, everything.
Apple Mac. Yeah, Apple Mac's got a question. We're going to throw it in there later. We got Charlotte NC in the building and Nathaniel Smith out of Knoxville, Tennessee. So make sure I hit the like button. And they're liking the information so far. So, you know, with this whole group, you know, you were going to night school, you're doing this, you're 10Xing it to death.
Forgot about the school too.
Yeah, you going to school for what? Is it MBA?
I'm getting an MBA right now at Pepperdine. So.
You know, he'll be in the car late night, driving, working. And what people don't understand is I don't want to do Gary V struggle economics, right? Like there was a whole article about it, and I get what they're saying, but you do have to have some push at some point. And I think you've been a great example of that this year, where you're going to have to put in some hours to create something great. You know, nothing great came out of 20 minutes, right? Nothing great came out of a 5-minute, like I put together, like Charles Oglesby, dedication to putting out his blog makes me write blogs. I'd be like, come on, Erica, Charles out there going to school, he's doing this. You can at least put the blog together in 20 minutes. Because I have so many sitting in draft that aren't finished. And so it's not necessarily I just want to definitely bring you on because I want to show people if you put a little bit of push to it, it's unlimited. The potential is unlimited, and there's other people who believe in that same ideal as you. So, what are some things? What are some things you've learned as far as location investing? Because the topic is long distance investing, but what are some things, because you're in California, why did you see Detroit, or why do you see other cities as potential?
Well, there's a lot of things that went into that. There's so many things that went into that, actually. But the first thing I always tell people is you have to invest where it makes sense. I am a value investor, meaning that I don't buy things that are priced high. And of course, value it's a lot more to it than just price. But what I found is, in my investing experience, whenever I bought something that everybody loved, I lost money. And so these days, what's really cool is I found that actually translates between real estate and stocks. And so these days, my personal investment portfolio is in all cash. Not because I'm some wizard and I'm just like, oh, I know the stock market's going to crash. It's because I didn't see any opportunity. I didn't see it. I can only put money where I see an opportunity. And so in California, I didn't really see an opportunity. Everything along the coast is overvalued. We were in the process of trying to do a deal in Huntington Beach, where it didn't make sense to actually spend the money on the land, just because the land was so overvalued that now you're gambling. And so when you start buying at highs, you start gambling. And so for me, I just immediately went on the search to find better opportunities that made more financial sense, that had less downside risk, because that's another thing that's important when you're value investing, is the margin of error and the margin of safety. And so if you buy something that's priced lower, it's either going to fall and you're only going to lose 10 grand. But if you buy something that costs $2 million and you lose a quarter of that, you're going to lose $500,000. And so your margin is different. A fall is going to hurt you less if you're investing where the market is more beneficial. So there's a lot of things that went into that. I think that first, just the aversion to California and the ever increasing prices and not knowing if it was going to be sustainable. If you look at the charts, a lot of those charts historically, our highs are actually meeting or exceeding what they were back in 2009. And so that scares me. Not because it can't potentially go higher, but because the odds are that it's potentially going to correct against itself. When you start dealing in multiple hundreds of thousands, millions of dollars, you have to guard yourself against that. And so I went to go find a better market. At first, we looked in Atlanta, and we were searching around Atlanta, and then Atlanta just started. You have to kind of look at the rate of increase also. And so the rate of increase in Atlanta was just moving too quick, where you look at something that costs 30, 40, 50, and now they're wanting like 70, 80, 90, 100. And so I can only presume that it's going to continue to run that fast. So you can try to get in front of that and hopefully catch the upswing. I just didn't want to take that risk because I'm not going to gamble. We're investing, we're not gambling. And so we found other markets in the Midwest. The podcast is so great just because it gives me opportunity to talk to investors from all across the country to see what they're doing that works. Had a conversation with Sterling Spencer, and he told me he had been buying properties in Indianapolis for like $15,000. And so I was like, there must be something to this. And so I started looking in all those Midwestern cities, and I wanted to find the best option for Midwestern cities. And so you always hear about Detroit. You don't really hear too much about like Indianapolis or some of those little unknown cities, but you always hear about Detroit. They're always talking about Detroit. They're talking about it so much to the point that you have all these billionaires, not just the Donald Sterling, is it Donald Sterling? Whatever that guy is, the guy who owns the Cavs. I should know his name, but you know his name?
Sold, it's Sterling, but he just sold the Greektown Casino, my favorite place, for $1 billion.
So I'm hoping that he's going to pour that cash into Opportunity Zone. I'm hoping that he reinvested back into the city. That's something that kind of worries me, is when he's selling. So he was one of the investors that I followed into the city. Another investor that we followed into the city was Warren Buffett. Warren Buffett is a big time investor in Detroit. Anytime Warren Buffett does something, you want to watch. Warren Buffett is somebody that I take all my investment cues from, even down to the actual value investing strategy.
I would say for the guy who sold, even though he sold the casino, he literally owns like every single piece of land downtown, y'all. I'm not even joking. Like when we were doing the tour with Asia, like everywhere you could look. Oh yeah, he owns that. He owns that. He owns that. He owns that. Oh, that parking lot. He owns that. He owns that. There's a house, and it looks like it's about to fall over. But they have been in a bidding, not a war, but like a stalemate for years, because it's so close to the stadium. He's like, here's $2 million. They're like, nah, we want $5 million. He's like, come on, give me this piece of this land. It's like a really big house. It's an old Victorian house, and it's a huge parking area. And the family just keeps going back and forth, like, no, no, no. Like it's crazy because it's close to on the water. There's another spot that's close to on the water, and he owns a bunch of spots over there, and it's actually an opportunity zone. And you know, when you own like every single piece of land around a building, you know you have a monopoly on a city. Dan Gilbert, thank you so much. Dan Gilbert. Frankie Robinson's from there, but thank you. Dan Gilbert.
Yeah, he's starting to look into investing into residential areas. It's not just the downtown area, because the downtown area honestly has started to become overvalued. So that's one thing I always try to look for is when you have this massive value, where is it going to spread next? Kind of like if you look in Atlanta where you have the stadium go up and then value spreads outward. So you have people building things around that stadium. So I think that there's a ton of markets. I just feel like Detroit for us made the most sense. And now people are starting to see that it makes sense. We, in the past year, we bought 6 properties. We bought 4 actual single family homes, and we bought 1 2-family flat. So that comes to 6 doors. But that was 1 year. And what Erica was getting at is she was saying the power of a group. And I think that having a group is truly a cheat code. And in all actuality, having a group is all you need. But on the other hand, not having a group can make you lose by default. And so if you look at what Tulsa Real Estate has done in 3 to 4 months, they raised money, they took down a deal of $2.5 million. With us, we raised money, we took down 6 properties. And so going forward, I think the strategy really is just to kind of become a more efficient group and try to figure out how we can become a bigger group, because the group really is the cheat code. You can do all you want on your own, but once you start working with other people, there really are no limits to what you can do. You can buy that sports team. You can start that company. You can buy that company. You can buy that trucking company. So that really, like at first, it was a theory. Everything that I say comes from a book to some extent. And so I always say business and investing are a team sport, and that's something I took from Rich Dad Poor Dad. And so for me, long distance real estate investing has so many different moving parts. One of those I wanted to make a point is just that 4-hour work week concept. And that I tell people all the time is that since we invest long distance, I don't have to stay in California if I don't want to. I can go on vacation and the rental property will still function just like if I was in California, or just like I was in Michigan, or just like I was in Texas. And so it really gives you a huge advantage if you're living that location independent lifestyle that they kind of promote inside of the 4-hour work week.
Well, the funny thing is, like, I know I keep talking about the channel, but if you guys keep hearing it, every guest I bring on talks about group economics to some point, or getting a group. We just had Terry on earlier, and she was like, if I can get a group of people, we'll have $1 million fund and be moving and trading within the stock market. Okay, it's $25,000. That's 40 people, and she's just moving. You know what I'm saying? Like, there's something to it.
Right.
And I think what people don't understand is, like, you're way more powerful if you have $1 million moving in a marketplace, or you're way more powerful if you're buying up hundreds of homes at a time. You could dictate what you want. There is a place in Dallas where this guy was selling a street of duplexes. Well, what is the buyer that's going to come and buy a street of duplexes? That person's going to have the real power to dictate to him and the seller, okay, well, really, I want to do this, or I want to take this price off, because he's willing to buy the whole bunch. And I see you guys have a ton of questions, and we're going to answer them. I just want to make sure we get through some of this. Let me get to one I saw. So somebody lives in Indy, right? And they said he's right. The housing is very affordable here. In fact, I keep getting investors sending postcards about my property and others in the area, to the point I was worried. So yeah, people overlook Indiana. Patrick said, look at Memphis as well. They have houses that are $10,000 to $30,000 in decent working class areas. What was the other one I saw? Apple Max said, my advice for California market is to pick up properties in foreclosure or tax sales off bidforassets.com. Well, here's the thing about that. You still want to have control over what you're picking. Like, if you have a criteria, you want to stay within your criteria. So you don't want to just pick what happens to come up on foreclosure. You rather have, an area where you have ripe choices.
Right.
Hence, you go outside your marketplace.
I feel like there's a lot to go, because, you have to think about it. A lot of people that are investing in California are using hard money. And the problem with hard money is there's a time limit and it's very expensive. And so we don't know where we are in the market cycle. We just know we're at the top of it, but we don't know where we're going to go from here. And so it would really, really be bad to have all these properties that are backed by expensive hard money that you're hoping that's going to sell for $1 million, when how many $1 million buyers are there really out there? I think that in a lot of ways, the economics of America and the economics of California are overestimating how many rich people there are. And so we're building these high income luxury apartments. That's all you see in Southern California is luxury apartments. We're building $1 million properties. And so that's why you see this massive outflow of people. So yeah, Facebook might be hiring. Yeah, Apple might be hiring, but that's Northern California. That's not Southern California. And so you have to really look at the dynamics of the real life California. And for me, I think the only real opportunity in Southern California is in the South LA area. And the reason for it is I always draw that example, like the South LA is the equivalent of the Midwest. So the Midwest is this area of undervalued properties surrounded by a bunch of New York, Virginia, all that stuff. So you have all these very, very high, expensive, high value properties. And then you have this area in there that's just undervalued and suppressed and depressed. The same thing is true for Los Angeles. You have $1 million properties all around South LA, and those properties are selling for like $300,000 to $400,000 to $500,000. And people are getting hip to it. They're saying, hey, this $1 million thing isn't going to last forever, but I can go buy this property over here for $400,000, $500,000 and then put it back on the market for $8 million. And so then people who don't necessarily want to, they want to still live in LA, and they're willing to kind of compromise, because if you look, like Compton's starting to kind of improve in value. Compton, you have these joggers out there, these hipsters out there moving
the kids around.
Right. I think the same thing is true for the Midwest.
What do you know about Empire Island? For whatever reason, Empire Island in California was getting like 300,000, 400,000 people moving there. And some people in the comments said that, it was a cheaper area, but I was just seeing what's your feedback on that area.
The Inland Empire is probably what you're talking about.
Inland Empire. I apologize. Yes. Inland Empire.
Interestingly enough, the Inland Empire is where I live. I live in Inland Empire, and it's lower cost. The downside, well, Inland Empire is where I live. Inland Empire is commutable to Orange County. Inland Empire is commutable to San Diego. Is commutable to it's kind of commutable to Los Angeles. So a lot of people, when my parents moved to the Inland Empire area, it was more affordable. It's starting to catch up. So my stepdad, when he bought his house, he paid like $120 for it. Now it's worth about $350. And so
cash out.
We're starting to see the values in the Inland Empire start to kind of be equivalent to what you see in Orange County. And so people are having to move even further east. And so before, what you could do is you could come up here and you can buy a house for $200,000, $300,000. Now those homes are like 5, 6. If you look for a house in Corona, which is where we are, you have these homes that are like $500,000, $600,000. And then if you go further north to like Rancho Cucamonga, which is still the Inland Empire, those homes are like 7 or 8-ish, maybe some even getting close to $1 million. So people have kind of gotten hip to that, and they're realizing you can drive, and they're widening out the freeways, and they're making the trains more efficient, and so you can commute from the Inland Empire to Los Angeles. So I think there's still opportunity here. I think that if you were looking to invest, there's opportunity here. And I want to say something about this, since we're kind of just like freestyling it. But a big part of it, like Graham Stephan, he invests in Los Angeles, but he didn't start in Los Angeles. He actually started in the Inland Empire. So when he first started buying properties, he started buying properties in San Bernardino, which is deep IE. It's actually not one of the better parts of the IE. And he was buying properties for less than what it cost to build. And as he got experience, as he got skills, as he got more resources from being a successful landlord out there, then he started investing where he wanted to invest. And so if you're somebody that's looking to invest and you don't have the resources to invest where you want to invest, long distance real estate investing also might get you that experience and the skill set that you need to invest where you want to invest, and the resources as well, and the connections. And so that's a big part of the thing that I did. I said, hey, I can try to force getting into Orange County, getting into LA. Let me go invest where I know I can successfully buy a property, rehab that property, exit that property, get my track record, get my experience up, get my confidence up. And then if I see a property in Atlanta, I can take it down. I think that's really important, is to kind of, a lot of people, they want to get rich on that first, second, third deal. And they don't realize like those first, second, third deals, that's just college for real estate investors. You need to learn how to close on the property to the point where now it's like second nature. You go like, oh, we're going to close on this property. It's going to cost X, Y, Z. You need to get to the point where you're experienced in talking to contractors. Because if you get into a high value property, high value area, if you're investing in Orange County, guessing, just taking the contractor's word for it, you might be in for a world of hurt with hard money backing you. And so I think that investing in the Inland Empire, I'm just against investing in California. I'm gonna just keep it real. If I thought investing in California was a good idea, I'd be doing it. I don't care if you buy a foreclosure. I don't care if you buy whatever.
I just wanted your feedback on it because it was like when I was doing the video on it, people were like, well, Erica, see, Inland Empire has 400,000 people moved there. And I'm like, okay, but I'm just trying to show you everybody else is going further out. So I thought I'd get somebody from California's opinion on that location. And here's the thing. Everything I was trying to get you to say in that is when people try to get something in their own backyard and the numbers don't work, they shut down. Right. They shut down. Their mind shuts down. You know how many times I talk to people from Virginia and DC and New York. Oh, I can't. It's New York City. I can't. It's New York City. Like they don't even try to think of, oh, I don't have to invest here. Just because I live here doesn't mean I have to invest here. And that's one of the biggest things I wanted people to take away from what we were talking about. Is like you shut down your mind when you think, oh, I got it. Like even my tax lien course, when I'm telling people you can buy tax liens anywhere. Oh, what about my hometown, my home? You're missing the forest for the trees. Right. So someone asked in the comments, how can you become an investor? And what's your definition on that?
When you say investor, do you mean like investor in general or investor with TOD Capital? Because I get that question.
Well, let's do one and then two. Let's do both of those.
Man, I think that you have to become obsessed with investing. And what I did, I'll tell you what I did. I first and foremost, I overdosed on the Bigger Pockets podcast. I listened to every episode. I was listening to multiple episodes per day. Anytime I was in the car, anytime I was at work, I would just fire up and I'll listen to the Bigger Pockets podcast. And the Bigger Pockets podcast is important because you get more, I don't know, it's just, first it's a lot of teaching and education in the Bigger Pockets podcast. And then also it just exposes you to multiple things. And so you'll learn about things you didn't even know existed just by going on the Bigger Pockets podcast. One of the worst things you can do as an investor or an aspiring investor is go to talk to people who aren't investors about investing, because what they're going to do is they're going to put fear, doubt, what do they call it? What do those Bitcoin people call it? Fear, unbelief, and doubt, FUD. And that's what they're going to give you. And I think that you have to avoid that. People to this day they're just now starting to see what I'm talking about. They're like, okay, maybe there's some validity to it.
Oh yeah. Try to tell your family and friends about your ideal. So, never do that.
Yeah, I think that's the first thing is get educated and start going to RIA meetings, start reading books. That you can't skip steps. And I think that's one of the most important things is you can't just skip over certain things. You can't skip over the mistakes. You can't skip over losing money. You can't skip over all those things. And so you just have to know that that's going to happen. Don't exaggerate the process, but you have to go through those bumps and bruises. And that's why those first few deals are important. So I think that there's a lot that you should be doing. And that's what the 10X thing comes into play. Like, it's not just like, oh, read this book, read Rich Dad Poor Dad, and you're good to go. Like, no, like yes, you have to read Rich Dad Poor Dad. You can't skip over not reading Rich Dad Poor Dad or listening to Rich Dad Poor Dad. You probably can't even skip over reading Cash Flow Quadrant and Rich Dad's Guide to Investing. You got to read it all.
I love Cash Flow Quadrant. Everybody knows on this channel, like that's if you go, Eric, what about Rich Dad Poor Dad? If you only got time for one, Cash Flow Quadrant, you're going to get banged double for your buck. They also said in the comment section, thank you, May 5, is fear, uncertainty, and doubt. But
there we go. He's a Bitcoin master over there, man.
Well, Patrick had a comment about Bitcoin. He's like, yeah, I did what people were saying to do in Bitcoin. I lost $7,000. Let me see right here.
I didn't tell him to do that.
Patrick said I lost $7,000 with Bitcoin and everybody liked that. I got in too late. I was skeptical. Thank you, Patrick, for sharing that with us, because a lot of people right now don't want to share that. And I just want to thank you for sharing with the audience. Somebody else said no man is an island. That's correct. They're talking about Midland, Texas. What's up, Chicago in the building? So yeah, Stephen Lott said 5-to-1 leverage ratio in Midwest real estate can equal 25,000 or less down on a property. In Cali, a 5-to-1 leverage ratio could be 100,000 into a $500,000 property.
Exactly.
Thank you, Stephen. That's spot on. Stephen Locke.
I said something like that on my my Snapchat this morning, and I was saying like, hey, we have 6 doors. Do you know what it would have taken to get 6 doors in California? It would have taken massive amount of just all the resources that we technically didn't have. Yeah. And so we have 6 doors, but that 6 doors looks way different in the Midwest compared to California. You probably never got 6 doors in California.
So Stephen Lott said, I took my $700,000 rental home renting for $2,500 and traded it for 5 rentals, renting for $1,100 a month and better tenant laws.
It's a hack.
Hey, winning.
It's a hack.
Yeah, and the funny thing is, Stephen Graham is a really big YouTuber, and he's like, I'm a millionaire, and he's in California. He's just now buying a 6th property. So You're right about that. Like, you're trying to invest in California. He is a millionaire. Like, people are missing that whole.
And he's been doing it for about 4 or 5 years too. So it took him 5 years to get to door 6
in California. Like, let go of California. Let it go. Like, go where the money makes sense. There's so many. Hold on, you guys. Okay, Noel said, facts, Charles. I'm in LA with a property in Philly. Multifamilies are cheap, under $100,000. Thank you, Nicole Noel. Apple Mac rents out $1,000 per room out of his house because he's in the middle of the oil field bust in Boom in Texas, near Lubbock, an hour away from Lubbock. Where's the other one? There's a really good one. Yeah, somebody just asked, was Bigger Pockets any good? Bigger Pockets is good. Like, listen, for its faults, for its judgment, Bigger Pockets has a forum. I've gone on there and connected with investors, connected with property managers. I've expanded my area as much as possible.
It's good to get you going. They're definitely going to get you going. And then you kind of have to educate yourself so then you can decipher what's going to be helpful to you and then what's also going to hold you back. Because some of the things they say might keep you from investing altogether.
Exactly. Horror stories. I'm like, I don't need your horror stories. I need to how you got started. Yeah. Like, there was one guy came on, and he was talking. He was like, "Oh yeah, I went from 100,000 in business lines of credit to 800,000 in a year," and he just kept rolling on in his conversation. I was like, "No, go back and explain how he went from 100,000 to 800. That's a whole show in itself." And so even on Bigger Pockets, I'm like, can we raise our hand for comments? Like, even they miss out on some of the really great points.
Right.
Here's another one. Oh, this person said, Uriah McIntosh said, Section 8 in Los Angeles pays $1,890 a month. It's still the cost of the house, though.
Yeah.
Okay.
It's unfortunate because if you think about it, if you're going to buy $1 million property, multifamily in California is very expensive, even in the hood.
Mm-hmm.
And if you really start doing the math, and I have done the math, it's kind of like the conversation that I just had on the podcast with Ponji, is you are forced to get a loan when you buy a property in California. Like, nobody's just cutting a check for $500,000. And then once what happens is the lender starts making more money in your property than you are. And so your lender is going to get that fat check each month that's going to be 100% interest, and you're going to cash flow maybe $200. Then it becomes an appreciation play. And right now it's not the time in California to be looking for appreciation. Now you could potentially be walking into negative equity because, just the properties with the interest rates rising, we're going to see a rollback in California prices. So it doesn't make sense to buy a property with low cash flow that's going to potentially, odds are, going to be worth less than what you paid for. It doesn't even make sense.
Oh yeah, there's a blog here of a guy who lived in Austin, Texas. His house appreciated from 120 to 250, and he was like, Austin's getting crazy. He's like, I'm gonna take this money. He took the equity out of the house and he bought 5 properties in Indianapolis. I think I've brought him on the channel several times, like talking about them like simple cash flow. Not simple passive cash flow, that's lame. This one's just simple cash flow. And he never shows his face, but he works remotely for the same company in Austin. And he was like, why live in my house that I could rent out for $2,000 and some change in Austin, go to Indiana, make sure my projects get done on time, be the GC on the properties. And now him and his wife live cheaply in Indiana, right, in Indy, in the main city. So, people, let's think creatively on where we can invest.
And one of my strategies was to actually use low cost of living areas where you can buy multiple rental properties to afford to live in a high cost of living state. And so you're basically going there, buying a property for $20,000, renting it out for $800 a month, And then after you factor in your repairs and your expenses, your insurance, taxes, all that stuff, you're going to cash flow $500 a month off a $20,000 property. That is a 25%. Actually, it's a 25% cash on cash, but I feel like that's the wrong metric. What it really is you're making $500 a month passively. And do you know what you have to do to invest anywhere else and make $500 per door? That's good numbers. That $500 per door is good numbers. And most people who are using debt are cash flowing $200. And so then what you do is you just pull all those together, and then you can afford to spend $2,000 on a one bedroom in California. You can afford to buy the $500,000 property. And so it really is. And this is why I tell people, like, it's being obsessed with investing. You have to become in love with the concept of investing if you want to do it well, because then you start to get in front of trends. Then you start to kind of see the arbitrage opportunities. I call it cost of living arbitrage, where you take your high cost of living income and you invest it into a low cost of living state, which then allows you to live better in your high cost of living state, if you even decide to live in that high cost of living state anymore. Because once you free yourself up from that location, which is typically driven by your job, then you get to live where the standard of living is higher. And so I think that that's what we're fighting for. Is we're fighting for that. I was telling Erica, it's the cost of living versus the standard of living. So if your standard of living can be great in North Carolina, why not go to North Carolina? The reason why people don't is because there aren't jobs in certain areas. And so we're chasing jobs. Unfortunately, that job's going to squeeze you tight. And so if you can free yourself from that job, then you can live where the standard of living is better, which is going to give you a lower cost of living. You're going to be able to have a better car. You can have a better house. You can retire your wife. Like, that's my goal. My goal is to free myself from my location where it's super expensive and the quality of life is low, and then go somewhere because I don't have to worry about a job. I'm not tied to California because that's what the jobs are. I have the passive income to live where I want to live.
Man, see, listen, you guys, he's dropping so many gems here. There's so many people tied to a job in a state or a city away from their family. When I was in apartment management, so many people were like, I'm going back home. Like, I gotta be out here in Texas for this. Like, I can do, from my own hometown. And I used to joke about, you'll meet people who get 2 rentals and they got a whole new attitude because they don't have to go to work. They choose to go to work, or they enjoy their work now because it's not a have to. It's not like if I miss work, I get a sick day, I can't afford to do anything. Like, you know what I mean? Like, the mindset is completely different. Now, Stephen Law said something that I thought was spot on. And then again, we're going to get back to the second part of the question is, how do they invest with Todd Capital? And he said in Cali, the high property costs for low rental cash on cash equals the landlord subsidizing the tenant's lifestyle. Invest out of California, rent in Cali. Totally agree.
Yeah.
So there's 100 of y'all on here. Definitely hit the like button. And Apple Mac is cracking me up. He's waiting on a crash or earthquake to hit before I even look at North California to invest. Yeah. So how can they invest with you though? Like, people are like, give me the meat, Charles. How can they invest with you?
I would say that question is so hard because we haven't fully situated the crowdfund to the point where we can just massively bring in people. So the best thing to do is join the group chat. And as you're a part of the group chat, then you become a part of the kind of like the family. And so then as opportunities pop up, because this is how it typically works. Like, you join the group chat, you watch what we're talking about, we share updates, you say, hey, this is what's going on with this property, this is what we're looking to buy next, this is how much it's going to cost. And so then we'll open it up to people who want to partner with us on that deal. And so what they'll say is, okay, I can invest X, I can invest 1,000, I can invest 5,000. And so then what we do is then we enter into an agreement where you are either a limited partner or a general partner in that property. And so then what we do is we create a whole new entity. That entity buys that property, then you're a part owner of that property. And so the goal to get a part of that is to email membership@capitaltod.com. And then what we'll do is we'll invite you to that group Slack chat. It helps if you've already downloaded and kind of you're a part of Slack, just because sometimes it can be more difficult if you aren't a part of Slack. And so what we'll do is we'll invite you to that general chat. And then as opportunities pop up, which depending on where we are with the members and what kind of resources they have, we can do something today. There's a ton of opportunities in our market. And so I think that's kind of the best way is to join the group chat. If you want to join the stock side, that's a lot more straightforward. And so with the stock side, you would email the same membership@capitaltod.com. And then Candace will send you an email, and then we'll get you connected to Vallejo. And the Vallejo has their steps. And so Vallejo is going to have that investment club agreement. Vallejo is going to set you up with the brokerage account agreement. They're going to do all of that on their back end. And so then once all that goes through, then you're part of the Vallejo platform. So right now we're starting to fill up TOD Capital Investment Club B, and then we'll move on to TOD Capital Investment Club C, which is basically the same thing. There's no different. It has the same president. It's actually being run by Jamal Patos, who's out of Baltimore. And so he's been helping us out with that, which he's kind of the president, and I'm still kind of CEOing operations. And so we talk all the time. It's just he has the ability to 100% give his focus to that platform. And so we're expanding. I would say just that email is membership@capitaltod.com.
So one more time, email you at membership@capitaltod.com.
Right.
Jump on the Slack, and as it shifts, as it grows, we're going to get up in there.
Right.
Okay, you guys, you hear that? This company's growing. If you want to be on the train, okay, you got to be in position. You got to be ready to jump on. And I think that's important because so many times people think, okay, yeah, I'm just going to send $20. Let's go. And that's not as always the case. It sometimes gets really, several people went, okay, I'm already on Slack. He said, you're saying the address too quick. Can you say it one more time for them a little bit slower?
The word is membership@capitaltod.com. I'm going to see if I can get that link for you guys right now.
Mm-hmm. And then they're all like, links, please. We're going to put it in there. Ben the bartender said download Slack now. Okay, so Ben the bartender, if anybody can repeat what I'm about to put in there, membership at Capital Todd. Is that what you said? Making sure?
Yes, capitaltod.com.
Okay. All right, you guys, I just put it in the comment section. Ben the bartender will keep posting it in there for me. Thank you, Ben the bartender, if you get a chance. There's 160 y'all in here. Hit the like button if you like what you hear and put a 1 in the comments. Let us know you hear us. Let us know you're enjoying it. What's the other one? They said, can you give your view of what's happening with the stock market?
Absolutely. Wrong link. Okay. So I think that a few things. What's really interesting is that a lot of people talk about opportunity zones, and they talk about capital gains, and they talk about people that are taking their money in the stock market to invest into opportunity zones, and they don't realize that when you harvest your capital gains, you have to sell. When you sell, stocks go down. So where do we see the biggest capital gains in the market right now? The tech sector. And so you see Facebook, Amazon, Apple hitting all-time highs, trillion-dollar companies. And so people are going to be taking their gains to then invest in real estate tax-free. I think that's one thing we're seeing. I also just think that a lot of those companies are overvalued. There's this book called Irrational Exuberance, and we're seeing a lot of that in Amazon. We're seeing a lot of that in Netflix. We're seeing a lot of that in Apple, where you have these companies that have just been going up just because that's what they do. Not because the companies are more profitable, not because of anything, but it's just the time for it to go up. And so my thinking is that, and this isn't a very technical answer, but my thinking is just that the market is overvalued. And so I made a point once. I said, hey, Amazon's overvalued. And somebody was like, you're crazy. What are you talking about? And so I was saying, like, watch earnings. We'll see if they're overvalued. They didn't miss on earnings. They still kind of won, but I think they tanked. But my thing is that it's overvalued. And that doesn't mean that it's going to tank tomorrow. It might be 6 months from now. It might be a year from now. But the value isn't in line with the actual value of the company. And so there's this book called, I forget what the book is called. I just read it recently, but there's this concept called regression to the mean. And so what the mean is basically it's an average of that company's value. And so you have these companies that hit bad press like Chipotle, and then they drop below what their actual value is. And you have these companies that they can't lose. And so those are like, Nvidia is a good company that's overvalued. Netflix is a company that's overvalued, where they just keep going up just because they're going up, despite maybe the product not improving, despite not the profitability improving. And so what happens is right now the market is so high, so far above the mean, that we have to correct itself back to the average. I don't think it's going to crash, but I do think that it's going to have to correct itself back to a number that makes logical sense, that is more in line with maybe the 200 moving day average, something along those lines. And so you have to take an average of the stock price over a certain amount of time, and then that stock price, if it's too far above it, is typically going to go back towards that average, and vice versa. If it's too far below, it's going to go back to the average. And that's one way that you find value. Another is that you take the price to earnings ratio, and so you start looking at these companies that have crazy price to earnings ratio, and you say that is not sustainable. Growth for the sake of just growth is not sustainable, and I think that it's not going to crash. I don't think it's going to crash. And quite honestly, a lot of us are looking for opportunities in the market. And the opportunity that I found in the market was Habit. Habit dropped 7%. And I was like, I want that. I need Habit stock now at $13. It's a deal. And so I think that's one of the things is when you start seeing a crash, you have to take advantage of stocks that shouldn't have fallen. So if you have a company that's a great company and there's this massive stock crash, then that's when you start going in and you start picking up deals. It's the same thing with real estate. If there's a huge crash and Los Angeles real estate goes down in value, that's when you buy, because that's when you know that there's value in the market. It might not go back up to $1 million, but if it's at $500,000, it might go back up to 750 or 8, and that's what you want. You just know it's not going to go too far from $500,000 down to zero. It'll never be zero. That just never happens. You're never going to lose all your money. So I think that there's a little bit of irrational exuberance where people are just buying because it's just always gone up. I've found that that's one of the worst ways to invest. And I found that by trial and error. I used to, when I first started investing, I would just sit on my computer and I would see a stock that did well and I would say, okay, that's what I want. And then it would correct. It would go back down the next day because that's what stocks do. They go up and down. They go up and down. I don't think we're in line for a recession. I don't think we're in line for a crash. A lot of people think that that's what we're doing. I think that we're just going to see some shift in value across the board where stocks that should be higher valued are going to be getting money reinvested back into them from people harvesting their capital gains from stocks like Amazon that are overvalued. And we're going to start seeing stocks that were lower value start to come back up to normal.
So there's a bunch of questions coming up, but I'm actually going to play out something I was talking with some other people earlier today. Not necessarily a recession, but a little bit of a bite back. You ever heard of that? It's like prices claw back a little bit, just a little bit. They just claw back a little bit. And for example, in the Austin, Texas market, I was like, I'm trying to buy this, I'm trying to buy a property, I'm trying to buy a house. And all of a sudden we had 150 houses all drop prices, right? So everybody's like, oh, we're crashing, we're peaking. Well, all those houses had offers on them the next 72 hours, every single house. Why? Because people were sitting there like, oh, waiting, gonna get it, waiting, gonna get it, waiting. And that's all that we're in is a lot of people who are sitting on the sidelines. When the price comes into their range, they're going to buy in the marketplace. So we may not see, and I'm careful on the wording because a lot of y'all follow my channel, there's going to be some shifting, but it's like there's certain people in our economy are going to be fine. People who create jobs for themselves are going to be fine. Charles Oglesby investing all over the country is going to be fine. A lot of people who are movers and shakers and investors will be fine. But if you're really solely dependent on your job, and if your job says, yeah, bye, Bob, see you a little bit later, and you have nothing, no investments, no other opportunities, you create it for yourself, yes, this will hurt you. The economy, any kind of shift will hurt you. Now, one person asked, how can they learn what you're talking about now as far as the stock side? Is there a class you teach on that? They got questions, Charles. They got questions.
Yeah. So we have a class that teaches kind of the fundamentals of investing. That class is called Investing 101, what they didn't teach you about money in school. I don't have the link for that, but it's going to be on my site pretty soon. I'm very sorry. I don't have the link for that.
Okay, I'm sorry, y'all. I thought he had the link. My bad.
Let me see if I can
have the Slack link, and I'll put the Slack link in there. I thought he had the link.
I'm going to find that link for you. But that's one class that we have. I want to say it's very reasonably priced. It's like 5 sessions where it's mostly my partner, Wale, who actually lives in Northern California. He's made a ton of money just trading options. And that's actually what our next course is going to be on is options investing. So trading options, deep value investing, which is a good opportunity to make money, and trying to figure out if that value exists. And so we have 2 classes. We have Investing 101, and we're also going to have the Advanced Investing Masterclass. So we'll have links for those soon. But those are I think you can learn from us. I don't even think it's healthy that I read as much as I read, but I really feel like that's how I learned. I learned from reading a bunch of books, being exposed to a bunch of concepts, and then putting it into practice. And so what you'll find is you can read as much as you want sometimes, but if you don't actually put it to practice, you're not going to learn. And so I think that a lot of people, yes, you have to learn. You can't skip that part. You can't skip steps. So you got to do the learning process. You got to be exposed. You got to know what you're looking at. And you're going to know what you're looking at by taking those courses. Invest in courses. That's one thing I'm doing now. Heavy. If you see somebody on the internet and they're successful and they have a course teaching you how they're successful, it's definitely worth the investment. That's the only thing that's going to allow you to skip steps per se. But so we have those classes. Wale's very successful. I've done very well in the stock market this year, like more than just like the average. And I think that's what you want to look for. You're looking for a professor like who is succeeded beyond the average. Like a lot of people made money in the stock market. A lot of people didn't make 1,200% in the stock market. So we have that. Let me see if I can find that link.
And the link I've been putting in there and that the moderators have been putting there is Charles Ogilvy's class on long distance investing in real estate. And his price is in there. You guys see it. I think it's 100% worth it. The thing of it is today I've been bringing you on hitters, y'all. Hitters. And the thing of it is like each person has a skill and a technique that you could follow or check out. And that's the thing. It's like I want to bring on experts in their field because I'm not an expert on everything. And there was a 3-year period, Charles, I was telling the audience where I just read everything. I'm in the car listening to audiobooks. I'm reading every book I can, but I was taking action. I was like every step away, apply a little bit. And then as I applied it, I was able to talk on it, right? Because I was actually doing it. And that's the problem. Some people get stuck in just reading forever. Like they're reading everything and they're just sitting on the sidelines. And that's not, you're not going to get any experience. And you're not going to get any traction that way. Now, I put Charles' Slack in there like 6 times. Andre Hatchett says, sign up. Yeah. Thank you, Andre Hatchett. You can check out Charles Ogilvy's long distance class in real estate. Thank you, Apple Mac. Andre Hatchett said this class will save you years. Now, Dollar WIL said sector rotation is key. He said learn technical analysis too. Now, Apple Mac said his question is, in stock investments, do you use fundamental, technical, or both strategies approach?
I feel like I've gotten this question in this class before, but absolutely both. And I can't think of a good analogy for doing both. I just know that they both kind of complement each other. You have to be able to read a chart. You have to be able to see where the trends are. You have to be able to see where there's weakness or where it's too far ahead of the averages. But you also have to know how to, you also have to kind of be able to value that company, because at the end of the day, it's a company. It's not a chart. The chart just helps you interpret what's going on in the company at that period of time. And so for me, I'm not an either or type of guy in anything. I'm always always an all of the above type of guy. So absolutely technical, absolutely fundamental. And I mean, there's certain people that they get really, really deep into technical analysis where they're spotting patterns. I think some patterns are helpful, like a head and shoulders pattern where you see 2 tops. You want to avoid the breakout on those. And there's different, like the cup and a handle. I don't really get too deep down that road. I just know that for the most part, finding the trend is very important. Seeing where it is in relation to the 52-week ratio, that's very important. And there's a book, I wish I had it. Ooh, it's called The Beginner's Guide to Day Trading. That book goes over every single chart that you could ever want to know. And it's good to refresh yourself on that book. It's probably time for me to refresh myself on that book. But that's probably one of the best books I've read on technical analysis. There's probably a whole bunch of better ones out there. But for like the fundamental basic beginner investor, that book, The Beginner's Guide to Day Trading, is helpful.
Y'all, he just gave like 20 gems. So if you don't do that, we'll go back and rewind the last segment of what we said. Boom. He gave you Udemy. You know Udemy course is going to be on discount because Udemy does Black Friday. Somebody in the comments, I'm going to laugh because she said all these courses cut into my Black Friday money. Erica's courses, notary course, opportunity zone course, and now these investing courses. I will tell you this, investing in these courses that we gave out this week, I promise you, if next year you're not making an extra $1,000 a month, come holler at your girl. Come holler at your girl by March or April of next year. Because if you really put the time in and you actually open these up and study, you'll love it. And I know you will. Queen Bella said facts. You guys are going to love it.
One of the things I'm doing with my course is I'm also providing free coaching, because I don't want to just teach you. I want you to win. And so anybody who's taking my course, I want to come alongside with you. I want to make sure that you're putting in practice all the principles that we're teaching. So that's going to come 100% free. You have my phone number, you have my email, you have anything that you have that you need to access me, ask me questions. We're going to help you win. We're not just going to, if you invest $150 with us, we're going to make sure that you find your property that's going to cash flow. We're going to help you find funding for that property. We're going to help you find a team to put things in place for that property. We're going to make it happen for you. It's my 100% goal to make sure that you win. So,
Charles, they're just ribbing us. They're just talking smack because they're laughing, but they're like, literally, they're like, this is liquid gold. So, Andre had to say these courses are better than college. Maurice Anderson said, I might have to take my strip club money and invest. Y'all are silly. Hand coaching, your boy's cold. The channels are great patterns. Lots of people are saying great stuff, Charles. They really love it. Oh, Ben the bartender said Amazon has to keep reinvesting in itself to keep their profits down. Thoughts on that?
Say it again for me.
He said that Amazon has to keep reinvesting in itself to keep their profits down. You mean as like a tax cut? Is that what you mean? Hold on. Go ahead. Tell me your thoughts on it. I'm gonna read some more.
I don't know that much about Amazon to really make that statement. So I couldn't even really give you a good answer on that. I know that for the longest time, what really is inspiring to me about Amazon is the fact that for the longest time, they were unprofitable. And people would slander them and they would say, oh, well, the company doesn't make any money, the valuation doesn't make sense. And then they started putting companies out of business. And one of the things that I've always done in life is push past the noise, because there's always going to be people that are going to tell you that what you're doing can't work, or they're going to tell you that what you're doing is wrong, or they're going to tell you that whatever. And Amazon pushed past the noise, and now Bezos is the richest man in the world. His company is worth $1 trillion. And so that's kind of what I take from that. I mean, of course, the strategy is they're going to do whatever it takes. And I think that's one of the things that I look for in a CEO is somebody that's willing to do whatever it takes. I was watching this documentary and they said that Amazon actually wanted to name its company Relentless because the goal is just to win, period, not to all these different things. So they're willing to take a loss. They're willing to eat profits. They're willing to reinvest back into themselves because the goal is just to win, period, at all costs. And so I think that whatever it is, they're going to do it. And that's what I'm looking forward to seeing what they're going to turn that company into. But I don't think they're infallible.
The thing I want to tell people, and being silly but being serious, Jeff Bezos has a whole new chin. If you look at any of the old documentaries, he got a whole new chin. When you can buy a whole new jawline, you winning. You winning hard. I mean, he literally is super focused. And like, if you look at them or Tesla, it is a person like even Apple, which I feel to this day, if Steve Jobs had lived longer, we'd all be wearing some kind of weird head technology right now. But he just didn't live that long, right? Some people are geniuses, and that's just is what it is. But what I'm really trying to straight to y'all is all day, all year, I've been saying what? Track where you guys are, track that income, then 2, see where you can deploy money, or you can either cut your expenses or grow your money, and then you have room to play. So many of y'all make really good money, and the reason I know is 80 to 90% of y'all buy my courses. I don't never hear a peep from y'all in the comments. Y'all just be going in there buying stuff. I'd be like, who is this? So even though I know we're talking a lot because it's Black Friday, don't be the person on Black Friday buying TVs but no education.
Yeah.
Right? Let's have next year be better. Let's have next year be extra $1,000. You know, let's have next year be an extra $2,000 in your pocket. And like Andre Hatchett knows this, Charles knows me for this. It is the steps of education and these courses and these conferences I've been going to every month. Because most people, what they do is, and I've been talking about this earlier today when I was on there with Terry, people design enough money to get it some extra, right? They get extra $1,000, $2,000, they're happy. You got to actually design your systems to get you an extra 5, 10, 20K. You got to think bigger and you got to think longer. And so a lot of this is just a drop in the bucket. You know what I mean?
I'm at a point where buying a TV for $1,000 is actually going to cost me more than $1,000. And the inverse is also true. Investing $1,000 in a course is going to make you 10,000, 100,000. And so it's really a matter of how far are you thinking? Are you thinking of the right now and enjoying yourself? Or are you thinking of where can I be a year, 2 years, 3 years, 4 years from now? And I think that that's really, it's unfortunate that we're sold to buy $1,000 TV, but I mean, think about it. You're going to then spend time watching that TV because you got to make sure you get the full experience out of that TV.
On the whole wall. I mean, just when I saw that TV, I'm like, y'all, come on now. We buying a TV across the whole wall? Like, literally, you're going to come in some people's house and they're going to have a couch and a TV on the wall. That's all they're going to be having in their den because that's all they can afford. And I've seen that play out.
Is there are people in this chat like Andre and Erica who get it. And that's why they are where they are, because they're saying, hey, I can buy a course or I can buy a TV. And so that's why they're making six figures, because they've made that decision last year, 2 years ago, 3 years ago. And so for you who wants to be where Andre and Erica are, it would make sense to kind of take the same decisions that they've made and implement those in your life so that then you can be where they are a year from now.
I love you guys. You guys, and Charles says this all the time. It's a bar. That's a bar. I don't even know what I said that was a bar. Probably talking about Black Friday. But if you heard what I said, just put it in the comments. Thank you, Andre Hatchett, for posting Charles' YouTube channel and his podcast. Definitely check both those out. Where are we at? Udemy is a secret weapon. Listen, big brother in life, these are facts all day, because I showed you on Udemy how you can find out how to do Facebook advertising. What is that course we showed on there? We did a whole video about it. Salesforce training. We've been talking about Salesforce training in the group, Charles. People are already breaking off and having study groups. Because most people are like, oh, Erica, just $80,000, $90,000 a year. That's not a lot of money. When half of America makes $30,000 a year, and getting you Salesforce training or cybersecurity training can get you $80K out the gate, entry level job with training. That's a change. That's really the deal. Let me see. Apple Mac said about 2 years ago, Amazon started to test with the 7-Eleven stores in Texas, installing mini post office boxes that allow 24/7 package pickup. You know why, Apple Mac? Because people have no delay grab. Like, they need their package today. They want it now, right? Like, and they don't want to wait for it just to come to the door. They want to pick it up and get it now. Business Plan Pro says she bought 3 Udemy courses last night. Congratulations. Maurice Anderson said, I'd rather get 100 LLCs than spend 1,000 on TV. And to say that, to real quick, Charles does LLCs, y'all. A lot of you, when you watch my channel, you're like, Eric, I went to the bank and they need an operating agreement. Okay, didn't I tell you go over to Charles? If you're not gonna do Rocket Lawyer, go work with Charles. He can hook you up. He'll set you straight.
And honestly, I think to kind of like pitch myself against Rocket Lawyer, I feel like, and I put this post out recently, the value in working with our company as opposed to Rocket Lawyer. And as we grow as a company, we're bringing on CPAs, we're bringing on other people who do legal work. It's not just about the transaction, it's about the relationship. And so my goal isn't just to get you an LLC and send you on your way. My goal is for you to succeed in business. And so a lot of people who I've worked with come to me all the time. They can always ask me questions. And I'm pretty sure the same is true if you worked with Erica. If you've done business with her before, she's always going to want to coach you through that process. And so it's great if all you need is an LLC, for sure, go with the Rocket Lawyer. But if you also want somebody who's going to help you get your business to the next level, it makes sense to invest in a person who's also going to in turn invest back in you and make sure that your business is successful. So I think that's the value that the Todd Consulting brand brings, is not just the fact that you are going to get your LLC, but we're also going to help you level up your business. We're also going to help you with marketing, with advertising, with referring clients to you, with putting you on our page, promoting what you're doing. So I think that's what you're really going to get aside from a transaction. But I mean, if by all means, if that's what you need and you need a low cost, then for sure, there's other opportunities out there, other options out there for you.
Oh, for sure. Listen, all day. Listen, when people want to get real things done, you can get on the phone with people like Charles. You know what I'm saying? Rocket Lawyer is just something I recommend on the channel because they gave me a couple months free. But at the end of the day, I like using them because I use them for some other stuff too. But yeah, a lot of people are saying thank you so much for the great information. Thank you for the great nuggets. Yeah, they basically want to know how they can be a part of the investing stuff. So yeah, we're putting the courses in there. Okay. Samri77 said, I'm committed to investing with Todd Capital for the next 120 months.
Nice.
All right. Thank you. Chipperline78 said, great information. Thank you, Apple Mac and Andre Hatchett, for posting the links. It helps everybody find stuff. What's the other question I had? Oh, prime example why I was talking about the LLCs, because the dude Stephen Lau was saying on live he had 177, because they were like, how did he get $17 million lines of credit? And then he just dropped it. He's like, well, I have 170 LLCs. Donald Trump has 658 LLCs that he's a part of in some shape or fashion, founder, partner, something. And when people go, I don't know if I should spend the money on the LLC, or I just don't know. And I'm like, it's the difference of having some protection and not, you know what I mean?
Right. I when I first started my own LLC, I started the company and I didn't even use the LLC for like a year to 2 years. But when I needed an LLC, not only did I have an LLC, I also had a seasoned LLC that was created in 2014. And so that's going to give you some legitimacy when you start looking for business credit. And so a lot of times it's good to move before you're ready. A lot of people, what they want to do is they want to wait until they have that property under contract. They want to wait until they are about to close on whatever, and that's when they want to get that LLC. But you might not realize that if you already have an LLC, you're more inclined to act. And if you don't have an LLC, you're more inclined to make excuses. So an LLC isn't a good way to play business, because sometimes people will play business, but it does help get you going. If you're having a hard time getting off of the sidelines, create your LLC. It costs you whatever it costs you. We charge 150 plus the filing fees, and you've spent $250 because most filing fees are about $100. And then you can get your business bank account. Then you can start talking to business credit. Then you can get the ball rolling. So then if you run across an opportunity, you have the entity, you have the credit card, you have everything set up. And so sometimes it's good to situate your company, even if it's a name that's not even relevant to what you want. Don't get caught up on the name. What really matters is the action you take under that name, and just create it. Go forward. Take steps without knowing where that last step is. It'll save you. It'll get you going.
Facts, y'all. Listen, the reason I bring this up is so many people, oh, I don't know. And I'm like, I have a friend from college who had old 7-year-old LLCs, Charles. You know what he did? Paid the fees, updated them all, right? Because he just had a bunch of them sitting out there. They were 7 years old. Paid the fee. The state of North Carolina let him reactivate all of them. And then he sold them as aged accounts. As season trade lines. I mean, it was like, this is a hustle on a hustle, right? I was like, he didn't even pay that much. He paid a couple $100 to reactivate each one and ended up selling for like $5-6 grand. Why? Because it was a company that was established 7 years ago. Do you know what I'm saying? Like, people miss out on a lot of stuff. Kenzie Roberts said Charles got that heat. He bringing the bars tonight. Bomo said great nuggets. Tech Incorporated. You are always the result of you 5 years ago. That's facts. What you do 5 years ago. I mean, the reason Charles is here now is choices 5 years ago. The reason Charles has a drop hot wife 5 years ago, right? Choices he made 5 years ago. You know, he's got a Lambo, but he don't show us his Lambo no more. Charles got a Lambo somewhere. He don't let us see it. Let me see. And I gotta let Charles go. I can't have him here all night because he's got lots of things in his store too. But Stephen Lott says something very important. 80 to 100K salary is a lot if you invest 40K of that year in rentals and reinvest the cash flow. Snowballing is key. And really what ends up, that's why I made that comment earlier, Stephen, is like, I'll meet people, they have 2 rentals and they're in Austin living the life. You know, they got a cheap apartment and 2 rentals somewhere and they're just living well. And you're like, bro, you could keep going and keep investing and live even better. So Charles, give us a little snippet on your what your course is, the long distance investing. And then, you know, I don't want to hold you too long, but I love all the information you're bringing.
Yeah. So what we've been doing over the last 2 years or last year and a half is buying, renting, rehabbing, and managing properties from out of state. And so what I want to teach people is exactly how we did it. There are ways you can do it, but this is how we did it. And so we're going to help people kind of avoid the trial and error. I mean, there's still going to be some mistakes that you could potentially make, but we want to kind of help you skip over all the hard work we did, all the guesswork, all the mistakes. And so we've created a framework that's going to allow you to just step right into opportunities. So we're going to go over creating your team. We're going to go over implementing that process. We're going to go over managing tenants from long distance. We're going to go over collecting rent. We're going to go over doing all the different things, all the systems you can put in place that we've successfully done over the last year that will allow you to just kind of hop right into it. And they're also going to help you find good markets to get into, because a lot of people, their question is like, where do I invest? And so we're kind of breaking it out. We're going to show you some heat maps. We're going to show you where the opportunities are. We're going to, it's going to be super intensive, but I think that not only that, it's not just exposing you to what's going on. It's also going to be walking you through the process hand in hand. Wherever you're looking to invest, we're going to say, hey, let's do this. Hey, let's do that. You need to be talking to this many people. You need to be talking to that many people. Let's see if this deal makes sense. So we're going to be analyzing deals. We're going to be marketing for deals. It's like a combination of a fundamental real estate investing class and applied long distance. I'm really passionate about the long distance real estate investing, just because that's where the opportunity is in America right now. I feel like if you're investing in your state, you're losing. And so the best thing to do is to figure out how to invest where it makes sense with the C, where it's profitable, where the returns are outsized compared to what you'd be getting if you're investing in your state, with the potential of a correction, then making you go upside down. With investing in hard money where it's expensive, we're teaching people to buy properties in cash and or with financing. And I think it's life-changing. Once you get these principles down, you can pretty much live wherever you want to live. So if you want to live that 4-hour work week life, you can do that. If you want to live on a beach, you can do that. It's liberating, it's life-changing. And this year we're going to really scale it and change even more lives. So, and then you also are making a difference in the process. Also drop the link to the LLCs. So that should be in the chat as well.
Okay, so I'm gonna copy and paste that. So you guys, listen. You already know I bring the hitters when I bring them on the channel. I bring the hitters. So in all the comment sections where Andre Hatchett and Apple Mac have been posting the links for courses, and I'll be posting in here for his LLC course. Charles, is there anything we need to look forward to from you in 2019? Is there anything big or unique as you kind of take us out of the show? What are some things you're looking forward to doing, or that you might be able to share with us? Because I know you can't share everything, but what you can share.
We're looking to double down on Detroit. And so we aren't just looking to buy single family homes. The goal is to literally redevelop communities. And so if you still look at Detroit, you'll see where they have commercial space. You'll see where they have warehouse space. You'll see where they have office space. Our goal is to really tap into that. We don't necessarily want to try to fight to get into downtown LA. We want to build our own. And so the goal is to really extend our reach in the Detroit area, maybe even get involved with local politics, start making connections in the right areas so we can really start doing major things. We're going to crowdfund, and we're going to level it up, and we're going to try to raise multiple millions of dollars to really just smack down in the middle of urban areas, specifically Detroit. Just looking to really, really expand this company. Of course, looking to expand the stock market side of the company. Like I said, we have 250, almost 300 members. We're doing really, really cool stuff out there. So the stocks are winning. We did 47% last year, looking to get to 60% this year. That's our benchmark, 60% return on investment, where the average return on investment is 12%, but we think we can do it. Man, we have so much going on that I think really complements everything that we're doing. So we have the podcast. We're on episode number 81. We just released that with Ponji Barnes. We also have the blog, so I'm constantly releasing information on the blog. I also have our social media. One thing that we are creating is a community, an online urban real estate investing community called Blacker Pockets. And so that's something we're looking to launch in the upcoming year. Is we want to have a forum website. So it's similar to Blacker Pocket or Bigger Pockets, but the thing is like we said earlier, is we feel like they kind of neglect a certain niche of investing, which we think is still an opportunity. And a lot of us have an opportunity or an advantage to be investing in those markets. And so what we're doing is we're educating people. We're working with people like Kendra Barnes, with Nita, bringing them in to help kind of teach people how to take advantage of areas that are often overlooked that, in my opinion, not only present a good return, but also help you kind of create solutions to the things that people complain about. So that's really my thing. Is I don't consider myself an active investor, but I really feel like I am, because for me, it's bigger than just the ROI. Like we make good returns. We make great returns, but we're providing affordable, clean, safe housing for people. We're looking to redevelop whole communities. We're looking to put jobs in communities. We're looking to employ people. Like for me, this is my form of the civil rights movement is creating opportunities for people, getting people off the streets, employing people, putting young men to work instead of putting them in jail, getting them off the streets instead of getting them to sell like whatever, anything else. And so it's really crazy, but I'm just happy that it's working out. I think that's so cool that everything that we said we're going to do is working out, and we just keep putting more effort, more energy. We're attracting more people to the vision. And I encourage anybody else, if you have an idea out there that you think is going to change the community, change the culture, you don't wait for somebody to validate it. Let the market validate it. Put it out there with whatever you have. Social media is such a huge tool. You can literally create a business just by setting up an Instagram profile. So I just encourage you to really just launch it, take action. And that's what we did. And we're a year in now, we got polos. So
where my polo? Charles ain't got me my polos yet, y'all. Get on him. You know, I love t-shirts.
I've Gumroad now. I can do anything with this thing.
All right, Apple Mac. I'll see you later, Apple Mac. Blacker Pockets is an awesome idea that our communities need. This is Gloria Mitchell. Listen, for those who are saying that you want to invest in Detroit, listen, go ahead and hit up those email links. And he'll said I'll do the drawings. Apple Mac said he's interested in Detroit apartments and hotels. Apple Mac, you got all those buckets of ruse. Let him know. Message him. Any ideals or stuff you have, let Charles know. But Charles, I'm gonna let you roll out tonight. Everybody, Charles' blog from this video will be up tomorrow. Tonight, Terry's article will be up here shortly. You guys have been amazing today. Like today, been a double hitter. And every time I get on here, it's like, oh my God, my brain. Because you're getting, interacting with people, you're getting information and you're going back and forth. It's like an ebb and flow. It's like you're learning, and interacting with everybody. Thank you guys for watching the channel. And they're saying thank you in the comment section. Thank you, Charles, for coming on the show. Again, everybody, where can they find you, Charles? Close us out.
I'll start from the fundamental level is social media. So on Twitter, it's at Todd Millionaire. On Instagram, it's at Todd Millionaire. The business Instagram profile is at Todd Investments. Blacker Pockets is at Blacker Pockets. My personal email is charles@capitaltodd.com. If you're looking to join the investment club, that's membership@capitaltodd.com. The website is www.capitaltodd.com. Check out the podcast. The podcast is so powerful. It always blows my mind when I look at the amount of people that I've had on that show. People from Juan Pablo, people from Erica, Andre, Roberta Hosky, Will, the Credit is King guy. I've had Tosin on there. I've had almost everybody that's connected to Jay Morrison's been on that show. Almost everybody that's connected to Kendra's been on that show. And they're just showing you how they got started. They're walking through day one. This is the very first thing I did. The story that I love the most is Nita, where she talks about how she started marketing by taking old boxes and a Sharpie and writing "I buy homes." And that's how she got her first deal. She probably made like $5,000 to $10,000 in that deal. And that just got the ball rolling. And I tell people, like, just start with what you have, man. What you have is plenty. And then what you do is you just start reinvesting what you make off of what you started with. And so the podcast, I haven't gotten Dr. Boyce on there. I also haven't gotten Dr. Claude Anderson, but I did have a connection with Dr. Dennis Kimbrough. I just need to follow through with that. But I mean, the crazy part about it is there's so much success all around us that isn't really widely talked about. And so the point of the podcast is really to bring those people. Everybody knows about LeBron James. We don't know about Roman. We don't know about the lady who bought all those homes. She bought a whole community in like Texas, some area. And so for me, that's the most important thing. I think my passion project is that podcast. I don't get paid for the podcast. It's really just to kind of shift the culture. So you can find that podcast on all platforms, on Stitcher, iTunes, and even YouTube, Stitcher, iTunes, YouTube, and SoundCloud. The way you find it is by searching the full name, TOD Capital, Millionaire Podcast. And that's me, just trying to elevate, push the culture while also making a return for our investors.
Listen, you guys, I bring hitters. Now, look, you got Terry traveling the world. You got Charles Oglesby all investing all over the United States. I think there's going to be a big year for both of them next year, and you should follow these people. If you don't follow them on Instagram, Twitter, check out what they're doing. You know, I don't bring people on the show willy-nilly. Like, I don't do many interviews, if y'all noticed that anymore. It's very few people I interview anymore because I'm giving them a platform to show who they are and what they're talking about. So I try to bring on the best of the best that I think you should follow. So you guys, all these links will be in the description below and in the top comment, always pinned. For those of you who are looking for all those courses, they will be in there. Everybody is saying the podcast has been fire. Thank you so much, Charles. Thank you for your time. You know, you're on California time, on the East Coast time. Thank you, Lou. Made it happen. But everybody who's been in the chat, thank you so much for commenting. Look, you guys, don't blow him up in his emails. Be kind. You know, there's like 14,000 subscribers on here. Y'all be in the emails, blowing them up. So, Charles, thank you for your time. Everybody, this is Erica Williams from the Classy Climb blog. If you haven't grabbed the Smartphone Millionaire book, definitely grab it. You can get it off Amazon or the links below. Thank you, Charles, for your time, and we'll see you later.
Thank you, guys.
Later.